Hi, today's topic is two highly undervalued altcoins. Two explosive large-cap altcoins for the emerging Ethereum L2 narrative. With the BTC spot ETF approvals now behind us, the crypto world can finally start to focus on the next big narrative. We are seeing the early signs of a rotation into ETH and DET proxies, and what appears to be a solid reversal of the ETH-BTC ratio. Over the course of the 2023 crypto ascent out of the bear markets, ETH price has lagged BTC and other layer 1s in a big way. The fundamentals, however, are as strong as they have ever been. Bitcoin and alternative layers 1s like Sol were the narrative drivers of 2023, but we are seeing the first signs of a huge shift towards Ethereum and ETH layer 2s. My expectation is that this new fundamentals-driven narrative will ignite ETH and a handful of other ETH proxies into moon missions. And now is the time to start loading your bags. Why the ETH narrative? Ethereum is the top layer 1 smart contract platform by virtually every metric. Market cap MC, total value locked, TVL, fees generated, stablecoins, protocols and devs, etc. In addition to the ETH domination in almost all metrics, it is much like a beach ball being held underwater. At some point, fundamentals will win, and the beach ball will come rocketing out of the water on a moon mission. The following catalysts and fundamental value drivers, though largely underappreciated by the markets to date, will be powerful drivers of the coming price appreciation of ETH and L2s. ETH spot ETF applications, deadlines in May 2024, deflationary burn mechanism which since inception in late 2022 has reduced the supply of ETH by 0.21%. Despite being in a brutal bear market, this burn mechanism scales with gas fees and will be extremely deflationary in the bull market. At 100 GWei, Ethereum would burn 10,000 ETH per day. ETH price has lagged Bitcoin and L1s over the last 18 months and is primed both to regain lost ground while accelerating based on fundamentals and narrative. As Ricky Bobby would say, slingshot engaged. L2s are proving to be excellent scaling solutions, and protocols like Arbitrum, Optimism, Polygon, Base, and others are attracting growing numbers of users, and TVL. Layer 2s are simply bulk buyers of ETH block space and benefit the ecosystem as a whole. Layer 2s settle natively to ETH and have a much more secure connection than your typical cross-chain bridge. ETH has effectively been declared a commodity and is unlikely to face any regulatory attacks from the SEC. EIP 4844 will be absolutely huge for ETH Layer 2s. Named Proto-Dank sharding, it allows proportions of the data settlement from L2s to ETH to be allocated to a separate temporary data layer, the result of which is significantly higher throughput and lower transaction fees. Wallet abstraction is not yet fully priced in. It allows for true mass adoption by abstracting away the complexities of interacting with the blockchain. Many protocols are currently building wallets that will yield a user experience more akin to a Web2 application, reducing the friction for new participants and attracting far more users. Altcoin Hash 1, Polygon, Dollarmatic. Polygon 2.0 is a massive innovation in layer 2 scaling. Essentially, it is a new system of Validium's crawlups that all function on a common interoperability layer that settles to Ethereum. Deep dive here. Without getting too technical, it is a system of ZK rollups, basically layer 3s, that all settle to an intermediate ZK rollup called the interop layer, a layer 2. Which then batches all the transactions and settles them to Ethereum. The result is you can have an infinite number of chains built with the Polygon CDK, all acting with their own custom parameters, and all connecting back to the same interop layer, sharing liquidity pools on the same network settings, and settling natively to ETH. Even the existing POS Polygon we all know and use will be connected to the interop layer. The beauty of this system is that adding new chains is easy and permissionless, and only requires the prospective chain to incentivize validators with POL tokens, and even USDC or RED. The same validators can simultaneously validate as many chains as they wish. The migration from Dollarmatic to $POL as part of the Polygon 2.0 upgrade is scheduled for the first half of 2024, and is already in testnet. Big-name chains and projects like OKX, Astar, Immutable, and many more have committed to building with Polygon 2.0 CDK. Given that all token unlocks are complete, and inflation is only 2%. Look for the price to really take off when POL 2.0 ramps up in the second half of this year. I have been adding to my bags over the past few weeks, and will continue to add on dips with the goal of a long-term bull run hold. Expectations are a low-risk 15 to 20x this cycle. Altcoin Hash 2, Arbitrum, $ARP. Arbitrum is a strong competitor to Matic, outperforming Matic on most metrics as an L2. The one caveat for Arbitrum is its PUA tokenomics and value accrual. That said, the fundamentals and huge adoption of $ARP way outweigh the shortcomings resulting from the subpar tokenomics which in any event are likely to be addressed in the coming 18 to 24 months. Arbitrum is arguably the largest chain after ETH and BSC, even beating Sol on multiple metrics. It has the lowest market cap to TVL ratio at 1.03. As a comparative exercise, $ARB currently has the MC of $2, 7B versus $3, 3B for Optimism. Optimism has a third of the stables and TVL, and 1/10 the daily volume. Arbitrum outperforms any other layer 2 on ETH by a long shot. Where it falls short versus Polygon is the inflation and token unlocks, as well as the token value accrual. $ARB also has a solid SDK with their optimistic rollup tech stack, but it is technically inferior to the scrollups of Polygon, with longer settlements, less throughput, and lack of global liquidity. Simple L2 comparison. As a layer 2, it is the most undervalued based on the above metrics, but comes in a close second to Polygon as a result of the inflation and tokenomics shortcomings. I am building a bag as I write, with the goal of building a long-term hodl bag for this bull run. My expectations are for a lower risk 10 to 15x this bull run, and in the event they improve tokenomics, it could push as high as a 20x from today's prices. Thank you so much for watching this video. I really appreciate your support and feedback. If you liked this video, please give it a thumbs up and leave a comment below. And if you want to see more videos like this, make sure you subscribe to my channel and hit the notification bell. Until next time, be safe and keep smiling.